the GST Council's decision, which has cut tax on over 50 goods, including washing machines, refrigerators, vacuum cleaners, paints, cosmetics, while sanitary napkins have been exempted. The move is expected to hit the government revenue slightly, but boost demand. In fact, comfortable revenue collections and a slowing economy could have prompted the council to act. Let's discuss the economic impact with Soumya Ghosh. He's Group Chief Economic Advisor at SBI. Joins us this morning on Indian Open or on First Word. Soumya, good having you. Thanks so much for taking the time out. You know, we've been waiting for the impact of demon to get over and then the impact of GST to get over and the higher rates to come off before we finally see some bit of boost to demand. Do you think moves such as the ones that were taken over the weekend have the potential or have the power to give a leg up to the flagging demand?
Yes, good morning. Yes, I think this is a good and smart move because this comes just 2-3 months before the festive season is supposed to kick off in October. So it will actually give the companies the freedom to pass on the price cuts to the consumers. And given the fact that it works with a lag, so from that point of view, it's a good step. And also the fact that the rural economy is now on the mend, and maybe some more steps on the rural economy side apart from the MSP hike would supplement the GST Council recommendation which came through in the weekend.
Interesting. Soumya, there are two more aspects. One is what it does to the slowing economy and whether some moves like these could have. So I believe you are on par with that perspective. What about revenue collections and procedural issues? Let's start off with revenue collections. What do you expect there? The by and large estimate would be that revenues would be hit, but would a higher demand partly negate the loss in revenue?
Yes, I think that's the entire mathematics which and the assumptions the government is actually gunning for, because if you also look last time when the rate cuts were implemented in December, I think there was a temporary dip in the GST collections and then the GST collections started to bounce back. As of today, I think the GST collections are hovering in the range of 90 to 95,000 crore. So we may see a little amount of dip from that number, but given the fact that the overall run rate for the entire year is, the government is estimating around 1 lakh crore. I think it could again get back to that, creep up to that number at a later date. But as of now, I think this move is supposed to increase compliance, and it will be purely a volume game through which the government expects the GST revenue should shoot up. But you can expect some amount of dip in the short term.
By December or by March, you would expect the revenues to come back to normalcy? I mean, by normalcy, I mean the current levels or closer to the government target. You think that is a reasonable estimate or an optimistic estimate?
I think that should be a reasonable estimate. I will not call it an optimistic, but I should call it a reasonable estimate that the GST collection comes back to the trend growth in the third quarter of the current financial year.
Interesting. Soumya, how do moves such as these or the ones or one or two that have been taken or could be taken going ahead as well, considering we are nearing the election season and the impact that such moves could have on the overall revenue estimates for the government? Because we all know that, the fisc estimates were anyways revised in the budget last year, and considering the 12 months would see fair amount of government spend plus some, populist stroke realist moves like the ones that have taken on Saturday. What does all of that do to the overall math?
See, the fiscal deficit estimates for the current year are already a little bit on the ambitious side, even though the assumptions which have gone on to the numbers are reasonable. But I think that these steps which are being taken in between, and I also expect that some steps could be taken on the agricultural side, because the MSP is not going to complete the O's of the rural sector. I think some more steps like the price deficiency schemes could be in the offing. So if I consider, and also these Ayushman scheme will be rolled out. So I think there will be pressure on the fiscal, and also these GST giveaways put some more pressure on the fiscal side. But as of now, I don't think there is too much, the government is too much worried on the fiscal front, because the final budget for next year will be presented in July only. So the final numbers, when you come out for what was the collections this year, what was the deficit of the 3.3%, that will only get to know when the new government is thrown in July. So from that point of view, the government may not be too much bothered about some sort of a fiscal leg up at this point of time.
Okay, Soumya, we'll leave it at that. Thank you so much for taking the time out and joining us and giving us that perspective. Really appreciate your time.